And as the belly goes, so does the hog price.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. Glad to have you on board as we take a look at Tuesday's market action. Make sure you like this video, subscribe to it by clicking on that bell icon down below, and make sure you share this video with others as well. Well, my special guest today, we have Justin McKinney of Comstock Investments to help take a look at the market action here on a Tuesday. Softness in corn and soybeans, the wheat mainly higher, but not in the spring wheat trade. Justin, we had the new crop progress numbers that came out from USDA. In other words, planting progress for corn and soybeans, especially. When you look at the corn progress numbers, I think people were shocked at how much corn actually did get in the ground.
Well, for sure. We were looking somewhere in that 68 to 70%, came out at 70%. What feels like we're running very slowly or behind pace with the continued rain in the western part of the belt maybe wasn't necessarily confirmed by that report, as we're basically on the 5-year average, a point behind. We look ahead at the forecast coming, significant rains again last night, more rain coming today, western Minnesota, western Iowa, parts of northeast Iowa are really struggling to get corn in the ground. Uh, we look forward. The western part of the belt is probably not going to make a lot of ground this week. Moving east of the Mississippi River, it looks like the Indiana, Ohio region, they're going to have a little bit of a window to get some corn in the ground. But ultimately, it comes back to what kind of conditions this crop goes in at, and it's not ideal, at least in Minnesota and western Iowa, what's left to plant anyway.
I talked with a few guys that were actually done with corn planting about a week ago. But you, on the other hand, happen to be in a bit of a bullseye. It's like it was right over your head where all the rain fell. So, what's the situation there in the northern corn belt where you are? You're up in what, southern Wisconsin or southeast Minnesota?
I'm in southeast Minnesota. We're most of the crop has gotten in the ground in our immediate region. You move towards the center part of the state and the west part of the state, that kind of triangle area, South Dakota, North Dakota, Minnesota. They're really struggling up there. We're starting to get here. Unfortunately, we're hearing an awful lot about potential PP or prevent plant on corn as we get closer to the date. And ultimately, if we take those acres off the market, not only does it have ramifications for our carryout situation, it also has multiple implications for what our fall basis situation will look like if those areas are corn deficit. You look in that center part of Iowa where we got an ethanol plant in every county, or you move to west central Minnesota where there's tons of demand there. It could change the definite picture or trajectory of what that fall number, basis number, looks like moving forward.
Now, I had heard I think in Iowa about a week ago, the basis crashed about 30 cents, didn't it, on corn?
Yeah, in some places, as people can't get it in the field, we saw a decent move in the market. Producers are just shaking loose with some bushels, and and we were at Commodity Classic, and we put the low in the market the day before on those March basis contracts at 422 in the July. We rallied up. We put a double top in last week at 475. That's a pretty good market move to reward some bushels, especially in those areas that were so strong on the basis. We were hearing 5, 10, 20 over in some spots. So definitely corn has moved. We saw the commitment of traders report as the funds lighten up on the shorts, the commercials added. So definite corn has moved. How long that continues will remains to be seen, and how much coverage they got on the books. I suspect they still need to buy some corn, probably for July. That June, as a former grain merchandiser, fills up relatively easy from farmer bushels, but moving into July, they'll probably got some work to do out there yet.
Okay, you have the corn planting progress map that you have provided here. And it looks like now, as we look at that map, the black numbers are the current ones. Is that right on the corn planting? The red ones would be from a week ago. And then the blue numbers would be the 5-year average on the totals. Anything really surprise you as far as state by state totals on that particular map or not?
Well, the Dakotas made really good progress last week. Uh, what got done last week is in some areas might be all the corn that gets planted, looking at the weather maps and what's coming across there now. So that was a surprise. They really hauled the mail and got her done out there as much as they could. Struggling a little bit in the eastern part of the belt. Looking at last year in the 5-year average, though, what feels like getting late is not probably as late as what statistically the average would be. So it kind of curbs the enthusiasm a little bit, especially when you see these next 4 or 5 days look pretty decent in that eastern part of the belt.
And you compare to 5 years ago, and it seems like the equipment has gotten a lot bigger just in the last 5 years. And now they can go 10 miles an hour and all that. So,
One of my clients Thursday night had virtually 70% of his corn to plant and significant amount of acres. I talked to him Monday morning. How much he got left? I got done. It was this morning and they ran straight through, but they got done. So it's really impressive how fast it goes. He'll admit some of it wasn't in the best condition, but at this stage in the game, he got it done. So ultimately, what does that lead us for trend line yield? I don't even know of anybody that's still hoping for a 181 trend line yield at this point. It's definitely something less of that. Um, I don't believe we can really make any sort of guess on that until we get into June and see how many of these acres actually do get planted in Illinois, Indiana, Ohio, Western Iowa, out at Royal. They're just getting hammered with rain out there even today.
so it would have to take a heck of a hit to the national yield, though, or the acreage, in order to not have a 2 billion carry, though, right?
Well, you can make that case. You take 10 bushels off the national crop and we got a different picture, depending on what you're using for planted acres. I think that at least it pushes pause for the funds short selling or continuing to add on shorts. There's enough risk that, hey, we could take 5, 10 bushels off this crop. Exports have been very good on corn. Demand has been excellent. And we got problems in Argentina. We've talked about the aphids and the bugs eating the corn down there. So starting to be little tidbits of information flowing into the market where, hey, maybe we've done enough on the downside to create demand and we need to at least push pause on that.
Okay, let's look at the soybean planting map then. Uh, as you mentioned earlier, we have the soybean progress at 52% done. Looks like a week ago it was 35. The average is 49. We're actually ahead of schedule on the soybean planting. I guess that's understandable why they would sell them off here today.
Yes, I agree with that 100%. Old crop leading the way on the downside in the soybeans. I really do think that was the export inspections report yesterday. Comes out at 6.8 million bushels versus last week at 15.9. We need to be in the 11.4 million bushels a week average. Historically, those are numbers that we just don't hit when we're battling South America. I have heard some rumors that prices have crept up down there, but ultimately that would be a tall order for us to average that the rest of the shipping season. And everybody's kind of looking at that USDA number, waiting for a revision to happen there on the old crop. The other part of this whole planting issue, or not issue, but discussion, Marlon, is there's so many people planting beans early, before corn now or at the same time as corn. So I continually think that we're going to see that soybean planting number lead in the this year and the future years just continue to be a little bit earlier and earlier. Now, ultimately, if people don't get their corn in, maybe that'll back off next year and we'll run 2 days of corn before we go corn and beans, or however that looks. Every year is different. But I do think a lot of that was the simple fact that people are getting their beans in quite a bit earlier this year.
Now, because of where you're located geographically, you do a lot of business in the Northern Corn Belt, Upper Midwest, and also the Northern Plains. Let's take a look at the spring wheat planting progress map that you have here. Now, what jumps off the page at you when you look at these numbers here? It seems like they're making pretty good progress there too.
Yeah, significantly ahead of last year, or excuse me, last year and last week, made huge gains in that. I've had some clients away in the northern part of Minnesota that have been done for quite a while on their spring wheat. Also, I I get reluctant to think that that number is going to significantly increase. There's quite a few talk amongst my clients that we're getting late enough in May that they may pull the plug on wheat and try something else if possible, just due to the yield, and they don't want to deal with the yield drag of planting it late. So although we're well ahead of schedule, I'm not so sure that we get a ton more winter wheat acres in that south or that North Dakota range. Maybe they go beans, maybe they go PP, prevent plant. I would definitely think that's an option. So that's the one thing that jumps out on the spring wheat.
Okay, another graphic you provided was the U.S. winter wheat condition rating. Now, this is interesting because last week we had the hard red winter wheat tour that went through Kansas and surrounding areas, and that surprised quite a few folks with the amount of production that they estimated out of there, even though they did pretty much estimate a fairly high abandonment rate. So that brought the average or the total production down. But the yield overall, everybody thought was a little better than expected. Now, what about these new latest condition ratings from USDA?
Well, you look at that wheat conditions rating. To me, I look at that versus the last year at 31. Significantly better. We're going to have a better wheat crop here, both in the hard red and the soft red, depending on how much rain, if we get any damage in that soft red wheat. But just as a blanket statement, the whole wheat market has been trading the Russian story. It's been well documented. They had the frost. We're going to lose production in Russia. Values have shot significantly higher in Russia. So we've had this priced into the market. Now we come out with the Kansas wheat tour suggesting a significantly higher yield than what everybody was thinking. Ultimately, will those export sales come to the United States? At this time, it's looking like we're more competitive, but until I see those shipments actually get those sales made and the shipments loaded, I kind of temper my wheat enthusiasm. 2 weeks left in the shipping season, and we're going to need to average about 17 million bushels a week. Again, that would be double and a half, 2.5 times what we did this week, roughly. That seems like a pretty tall order at this game or this state in the game.
Being a Plains kid myself and growing hard red wheat myself, I like to follow the Kansas City market, and I'm looking here at a July chart. And it looks like for about the third or fourth time now in the last couple of weeks, we are bumping our head on a 50% retracement line. Well, I tell you what, with harvest just around the corner, that seems like that could be a hard overhead resistance mark to me.
Boy, who knows when we get into harvest what's actually there, but we've often talked about this. A lot of times your best time to sell wheat's off the combine, but it very well could be this year that your best chance to sell wheat is right before the combines. We talked before we started recording this about the wheat harvest moving in Texas. These are prices that 3 months ago we never would have wildly even guessed that we would be near these levels. So as we put the lows in, not a lot of action happened with producer hedging. Now we have a $7 July wheat board, 7.16 in the September. I definitely think producers are probably going to start taking advantage of some of those prices.
Well, 3 months ago, I would not have believed that we would have $1.50 rally in wheat. Except for we had that freeze news that came out here about a month ago. But other than that, it just seemed like there wasn't much hope for it. I'm hoping people do something to maybe lock that in anyway.
Well, one would sure think that these prices definitely look attractive. I'm not super familiar with the Kansas City crop or the budgets or things like that, but when you look at $7 wheat board, and if you pull up a daily chart and go back and look at the amount of times that we hit $8, you're probably hoping for something that doesn't happen very often.
Now, this is a little bit tangential here, but you and I were talking also before we hit the record button here about the recent move in oats. I don't know what's going on with oats. It's like somebody threw them off a cliff. They were having a really good run here till about a week and a half ago or so, and it's been straight down ever since. Is that because of rain in the forecast? Have you heard from anybody? What's that about?
Probably quite a bit of rain in the forecast, and if you were going to plant oats, you got them in the ground already, especially in northern Minnesota and Kansas or excuse me, northern Minnesota and Canada, where the bulk of the oats are growing. I would probably guess that that's mostly rain and better crop conditions in those oat growing regions.
All right, I want to take a look at our livestock trade again. Another stellar day in the cattle market. Wow, I mean, somebody almost has to throw cold water on that cattle market just to get it to slow down a little bit. How long can it keep this up anyway?
Well, that's the $1,000,000 question, Marlon. How long can it keep going? We did see boxes trade higher again today at the midday. We're 313. It was up $1.17 here at the midday. Load count has been pretty good, showing that demand has, continued to move box beef and products. So as we move through Labor Day, we'll be interested to see how Packers come out and bid next week. I think they're going to have to pay dollars higher this week. Producers got a taste of victory last week. I think that definitely stays with them. We saw the fact market significantly higher at about $1.50 today, but yet we're 2 weeks away from delivery on the June contract, and we still have that $7 or so spread where cash is higher than the board. So is cash going to drop down, or is futures coming up? And at this time, the money's betting that the futures are going to move higher, just with the numbers of cattle that are out there to move.
Is it really that strong of a demand at the retail counter, or is it just because of such a short supply? Which is it?
Well, the only thing that I've heard is really backed off much is some of the branded higher end products. So, we had that choice select spread, very narrow historically, starting to widen out a little bit. But at the end of the day, there seems to be pretty good demand at the retail counter for beef products moving at least forward. I always wonder when I think about the beef and as high as it is, how does that play into the whole 10,000 foot view of the economic situation and the consumers? And we've been waiting for the consumer to stop purchasing, right? For the last year, we've been talking about that. It just has not happened yet. So at some point we will hit that, but it does not look like we're in risk of, if you take out the black swan of the avian flu in cattle, we probably wouldn't even be talking about the markets were, rallying in the last week and a half, 2 weeks. We probably just would have been treading water in that 190, 195 cash range.
Well, on the other hand, the pork, the lean hog trade, it looks totally inverted from the cattle. It's like it's upside down, and it kind of needs a lifeline.
It does. And, we're coming into belly season. And as the belly goes, so does the hog price. We're looking at $1.20, $1.30. I think bellies were in the $1.30s this morning when I looked. Still a lot of work to do in those bellies if we're going to see that hog market rally. Kill continues to run over last year's. Weights were only a pound lighter last week than last year. We're going to need some help in them hogs moving forward.
Have you heard anything lately on the Chinese hog herd? I know for a while they were trying to rebuild it, but then they keep having disease issues too over there. So what's the latest that you have heard about it?
I haven't heard a lot. And actually, funny you say that. I actually had a client today, an Iowa client, ask about that, and also what I was hearing from other producers about the disease pressure here, because we did have a significant round of PRRS this winter that really knocked out a lot of sow units and put producers in a situation where we, maybe short some pigs that we need to buy in here.
All right. Well, Justin, I appreciate all the information today, and it's always good to hear from you. And I hope you have a good trading week out there. Thanks for helping to cover the planning progress, et cetera. Justin McKinney with us. He is with Comstock Investments. That'll do it for this episode. Appreciate you joining us. For producer Brianne Hendrickson, I'm Marlon Bowling. Catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.